The gold market is once again seeing good safe haven demand. We'll get Jim Wyckoff's thoughts next. Jim, great having you back with us.
Great to be back, Daniela.
Jim, in your morning commentary, you stated that gold is seeing a return to safe haven demand. This is obviously something we haven't seen in a couple of months. Jim, what's happening?
Well, this is good news for the bulls, Daniela. We saw some very uncertain activity and attitudes in the marketplace overnight, early Thursday morning, and that supported safe haven buying interest in the gold market. You saw the U.S. dollar index sharply lower. The dollar index did not see the safe haven demand that gold saw, so that's another bullish clue for gold. We've just seen the Fed activity on Wednesday, whereby Chief Bernanke kind of spoke out of both sides of his mouth. The FOMC minutes were a bit hawkish, and I think the marketplace came to read overall the Fed news yesterday as being tilted toward the hawkish side. So that was a bearish development at the close yesterday. But then overnight, the Japanese market sold off. The stock market hit had a 7% loss on the day, which is the sharpest in a long time. I think most of that was profit taking, but there was indeed keener uncertainty in the marketplace, a risk-off trader mentality, and that led to some safe haven demand for gold. That suggests to me that there is resilience. The bulls are resilient at these lower price levels in the gold market, and that is indicative that a market bottom is in place.
So, Jim, investors that were flocking to the U.S. dollar may be returning to gold now?
Right. It was just a really good signal if you're a gold market bull that you saw the dollar under pressure because of this risk aversion, but yet you saw gold prices higher. We did see some better U.S. economic data out Thursday morning that took some of the price gains away from the gold market, but as we speak, we were holding moderate gains on some safe haven demand.
Jim, you mentioned Bernanke, and let's get some quick thoughts from you regarding yesterday's minutes. They were far from conclusive on when the Fed would end QE. Were there any surprises there for you?
Well, I think the surprise in Bernanke's comments yesterday were that former Fed Governor Larry Lindsey put it succinctly, and I agree with him. He said he thinks that Bernanke just flubbed up and made a mistake in saying that the tapering of the bond buying could occur sooner rather than later. My bias is still that Bernanke is still a dove on monetary policy and that he will be in favor of keeping this quantitative easing going at least until the end of this year.
Jim, let's look at some key numbers for gold now. What's going to get us to that 1,400 level and keep us above it?
The way I look at it, Daniela, we did push above 1,400 on Wednesday, but we could not close above that level. We need to see a close in June gold above 1,400. That's going to give the bulls fresh upside momentum. Then the next upside price objective would be maybe the 1,410 or 1,420 level. On the downside, we see some strong technical support at the April spike low at 1,321 and change. Resistance for gold is seen at 1,400. For the silver market, we've got some strong overhead resistance at the $24 level. Strong technical support at this week's low of 2025. If you close silver below 2025, that is a significantly bearish development that's going to suggest more strong downside price pressure.
All right, Jim, on that note, let's look at your Wyckoff market rating system. What grade are you giving gold and silver this week?
I'm giving both gold and silver a rating of 3. That is up from recently, but still in the bearish camp. The bulls and the silver and gold bulls have much more heavy lifting to do here in the near term to suggest that prices can sustain an uptrend. I do think that in the silver market also that technical price action this week in silver has been favorable to the bulls to also suggest that that market has put in a low. But just because markets put in a low, that doesn't mean they're automatically going to start trending higher. We could see choppy and sideways trading in these markets for the foreseeable future. And what the Kitco readers need to do is keep tuning into my AM and PM reports to get those early clues on when those markets could start to sustain an uptrend.
Jim, and before I let you go, we had Peter Hugg, our global trading director, on yesterday, and he's been bearish since November 2012, but has told me that he's beginning to turn towards the bullish side now. Are you ready to do the same, Jim? Can you put one foot in that bullish camp?
Nope, Daniela, I let the charts do my talking for me from a technical perspective, and we've still got downtrends in place on the daily charts. And as long as we've got downtrends in place on the daily charts, the bears are going to have the near-term technical advantage. But like I said, keep in touch, and I'll let you know when those uptrends start to develop.
That's all the time we have today, Jim. Thanks so much.
Can't wait till next time, Daniela. Bye-bye.
And thanks for watching this edition of Technically Speaking with Jim Wyckoff. We'll have more for you next week. You can email us at newsfeedback@kitco.com. Thanks for watching.